Hey, what's going on, guys? YieldMax has just came out with their most recent report of their distributions for their Group A funds, as well as 3 weekly pairs. We're going to go through those numbers and look at some of the projected yields. I was pretty excited about this announcement because FEAT and FIVY are 2 new funds that have never paid a dividend before. So I was interested to see what kind of yields those funds were going to pay. So let's go ahead and look at the news article here. So I guess just to summarize, FEAT paid $2.19, FIVY paid $1.67, YBIT paid 78 cents, LFGY, this is another one that is a brand new fund. It is a new weekly payer. They paid 74 cents. SNOY paid 73 cents, almost 74 cents there. TSLY paid 71 cents. That's a pretty low number for them. I was expecting over $1. We'll see what other people have to say about that. TSMY, 64 cents. XOMO, 34 cents. So let's look at this news article here. Yeah, so like I mentioned, their new fund, LFGY, is a crypto industry and tech portfolio paying out weekly. So that'll be a cool one to track as well. So these are the 3 weekly pairs followed by, their monthly or, every 4 weeks. So yeah, pretty interesting. Some things that, they used to show the projected, distribution yield. For some reason, they stopped showing that. If somebody knows why, definitely let me know. I kind of calculated that data myself on the spreadsheet here. We'll go ahead and take a look at it. So I believe this is sorted by largest amount to the bottom here. So looking at FEAT and FIVY, those are the top 2 on this list. FEAT, according to this distribution amounts, or this amount, and so the way I calculated this, I used the Google Finance to to pretty much pull in the data from yesterday, because that's what YieldMax used to use. They used to use the close value of the previous day to kind of illustrate this yield. And then I'm multiplying it by 13 months as well. If that's not right, somebody let me know. I think that, I back tested some data from some previous months where YieldMax did announce, their distribution projected yield, and it was pretty close. I couldn't figure out exactly how to get it 100% right. So disclaimer, these might be off a little bit, but they were pretty close, and I felt pretty comfortable with displaying this data since they were pretty close there. So with that being said, FEAT 59%, that's pretty massive. Was not expecting that high of a yield, because remember, that fund actually holds the underlying as well as some synthetics. Same with FIVY. These are both of the 2 new Dorsey Wright funds. So 59%, 44%. YBIT came in at 75.56%. LFGY, so this is the crypto one. This is pretty interesting as well. Please correct me if you guys think this yield is off. But what I calculated at 17.88%. And that's actually not right, because LFGY is going to be a weekly payer. So this is actually, should be 52 weeks. Let's update that. So it's a 71% yield. Okay, so that makes a little bit more sense. Let me update these other ones as well. So the 2 weekly pairs. Okay, so sorry about that. But it does update that value to 71.51%. Next on the list is 49.89%. TSLY coming in at 64%. TSMY 41.9%. 30%, 28%, 40%, 62%. YMAX at 52, almost 53%, and then YMAG at 27.57%. So, hope this data was valuable for you guys. Some other things to look at, so not all of these funds were released at the same time. I added some notes here for their different inception dates, just to kind of give me some clarity there. But this is so none of these funds, except for, I think these 2 have already paid some year to date, but these have not. None of these have paid in 2025. So this is a true price return, and it looks like FIVY has been leading the way as far as that goes. Tesla's been doing pretty well at 7.43%. But yeah, so that's kind of that data and how that's getting calculated. 2024, this is just for price return. Dividends are not included in this. So just kind of keep that in mind. And then volume, this is trading volume, not really important unless you're actively wanting to trade these types of funds, which I try to do sometimes on some of the most popular ones like TSLY, Coney, Misty, and YBIT, but do with that as you will. But yeah, guys, that's going to be it. Let me know your thoughts. Let me know if you're disappointed with any of these numbers. You know, like I mentioned, TSLY, I was expecting $1, more than $1. They paid at 71 cents. I haven't been following their trades. You know, TSLY, the price return's been doing pretty well. So maybe they're trying to recover some of that NAV erosion. We'll see. You know, I used to believe that YieldMax paid out all their distributions, but I think they're keeping some of that back, and then towards the end of the year they'll just pay a big distribution announcement. But stay tuned. And feel free to someone correct me if I'm wrong too on that information, because you know I can't 100% say whether or not that's true or not. That's just something I've heard on the internet. But yeah, guys, that's it for today's video. Once again, these are the Group A funds, as well as three weekly dividend payers: YMAX, YMAG, and LFGY. Let's see what people are saying in the chats. Yeah, so sending some gifts. Okay, so he also attached the screenshot. Yeah, so people are pretty happy. It appears. FEAT, like we talked about, FEAT is an interesting one. It's a Dorsey right fund. LFGY, I think a lot of people are going to be jumping on that one for sure too. You know, it looks like, you know, like we talked about, it's paying a 70% yield, and it's crypto based. LFGY looking solid. Tesla keeps going down and down on this list. So this guy's not real happy. He said, start focusing on getting the Coney Ulti NAV up. Stop cutting the mad dividends. I'm sure I'm not the only one that pissed off. Yeah. So, you know, maybe a strategy they're trying to implement, you know, if they're cutting their dividends, they're trying to not distribute as much. So that means that the NAV could potentially recover. Yeah. So that looks like that's it. Once again, I want to look at FEAT and FIVY just to make sure I'm not losing my mind here, but I'm pretty sure they hold the underlying directly, as well as, you know, like some synthetic positions. So if we look at the Dorsey right, go all the way to the bottom. Okay, so I take that back. They actually, so FEAT just holds YieldMax's equivalent, right? So they go out and find the best. So they use some type of proprietary index to see, you know, which fund has the best momentum. And then FIVY, they are the ones that, I think it splits like a 60-40. Don't quote me on this. Let's see. They split. Yeah, so they have a hybrid index, 60% exposure to YieldMax ETFs and a 40% exposure to the underlying. Okay, so, and we'll be able to see that right here, that they are buying YieldMax funds, but they also are buying some synthetic, not synthetic, they're buying the underlying as well. Some MSTR, Coinbase, Meta, Tesla, and Netflix. So they're not, it doesn't look like they're selling options. I'm going to have to do some more research on this, and I'll get back to you guys on this. But, you know, high level, I kind of just wanted to look at the numbers. So, yeah, it looks like 100% of the YieldMax funds pays higher versus, you know, holding a 60-40 split. It's going to pay lower there. And that makes sense. 100% that makes sense to me. So, yeah, guys, that's it for today's video. Hope you got some value from it. Please like and subscribe down below. Let me know any comments, any questions. Would love to hear your feedback in the comment section down below, and stay tuned for more content coming soon.